Hello moneymakers, let's see today's top 5 market updates. Job openings and labor turnover survey data and wholesale inventories out at 10 a.m. Eastern Standard Time. The Labor Department's Job Openings and Labor Market Survey for April, JOLTS, is due out Tuesday at 10 a.m. Eastern Standard Time and is expected to show openings of 5 million against 6.19 million the prior month. The report will also highlight vacancies versus job seekers. Before the beginning of COVID-19 shutdowns, the JOLTS showed how tight the labor market was getting amid 50-year low unemployment rates. Data on wholesale inventories at 10 a.m. Eastern Standard Time are expected to show a rise of 0.4% month-over-month, compared to -0.8% the prior month. Any data on business activity is likely to capture the attention of investors as New York City begins to reopen for business after a 100-day shutdown over COVID-19. Fiat, PSA merger hits EU roadblock, may need concessions. Fiat and PSA, which are seeking to create the world's fourth biggest car maker, were told of the European Commission's concerns last week, according to the sources familiar with the matter. If the two companies fail to dispel those concerns in the next 2 days and then decline to offer concessions by Wednesday, the deadline for doing so, the deal would face a 4-month investigation once the preliminary review ends. Fiat Chrysler and PSA already produce vans through a 50-50 joint venture called Wholesale. Based in Atessa, Italy, Wholesale is Europe's largest assembly plant for vans, producing 1,200 units a day before interruptions due to the coronavirus. According to the European Automobile Manufacturers Association, the two car makers produced a total of 755,000 light commercial vehicles last year, giving them a potential combined market share of around 34%, the market leader, followed by Renault and Ford, with about a 16% market share each. Fiat and PSA are looking to merge to help offset slowing demand and shoulder the cost of making cleaner vehicles to meet tougher emissions regulations. World Bank forecasts worst recession in 8 decades on virus. The global economy will contract the most since World War II this year due to the COVID-19 pandemic, reducing incomes and sending millions of people into poverty in emerging and developing nations, the World Bank said. Global gross domestic product will probably shrink 5.2% in 2020, the Washington-based development organization said in its semi-annual Global Economic Prospects report Monday. That compares with a January projection for a 2.5% expansion and would be the 4th deepest recession of the past 150 years after 1914, 1930-32 and 1945-46, the World Bank said. Per capita output will contract in more than 90% of countries, the biggest share since 1870. The economy will rebound in 2021, growing 4.2%, it said. This is the first recession since 1870 triggered solely by a pandemic, and it continues to manifest itself, Salih Azerbaycanoglu, the World Bank's vice president of equitable growth, finance and institutions. While the World Bank sees China's economy eking out 1% growth this year, the lowest rate since 1976, it forecasts India's will shrink 3.2%. US GDP may contract 6.1%. Al Israel Airlines extends unpaid leave, says can't resume without bailout. Al Israel Airlines on Monday extended unpaid leave for 5,800 workers until July 31 and said that without state aid, it will not be able to resume operations once the country's borders, shut over the coronavirus crisis, reopen. Israel's flag carrier on Sunday extended a suspension of scheduled commercial flights until June 30, but said it would continue to use its aircraft for cargo and occasional passenger flights. While Israel has eased its coronavirus restrictions in the past few weeks, incoming passengers are still required to self-isolate, and a ban on foreigners entering the country remains in place. Due to weak demand, El Al halted flights in late March, and the suspension has been extended repeatedly. El Al has been seeking state-backed loans of $400 million to help it through the coronavirus crisis. The government is asking the airline to issue $150 million in shares as part of the bailout package that would require significant cost-cutting measures. It also includes a $250 million state-backed loan. Alibaba says cloud unit to recruit 5,000 staff globally this financial year. Alibaba Group said its cloud unit aims to recruit 5,000 staff globally from now until the end of this financial year, in areas including network, database, servers, chips and artificial intelligence, it said in a statement on Tuesday. The digital transformation journey for businesses in China, which was previously expected to take 3 to 5 years, is now likely to be accelerated to be completed within 1 year, said Jeff Zhang, president of Alibaba Cloud Intelligence. To move forward in full speed, we are not only building trusted cloud technologies and services, but also investing in worldwide talents, he said. Thank you for watching. Subscribe for regular updates, only at Capital Street FX.